The green energy sector is expected to see upwards of $150 trillion in investments over the next 3 decades. And while major companies like Tesla and Enphase Energy tend to get most of the headlines, there are smaller, under-the-radar players better positioned to benefit from the global shift. In this vein, here are a few under-the-radar stocks offering strong growth potential and resilience in an increasingly competitive market. Stay with me as I reveal some green energy companies that are quietly gaining in market share and offer exceptional returns. Be sure also to subscribe to the channel for more insight into emerging investment opportunities. Number 5. Clearway Energy Incorporated. Clearway Energy is one of the largest stickers in renewable generation facilities in the US, but it tends to fly somewhat under the radar compared to some of the more high-profile competition. The company focuses principally on wind and solar, supplemented by highly efficient natural gas-powered plants. Perhaps what makes Clearway particularly appealing is its long-term power purchase agreements that assure predictable revenue for the company. In 2022, Clearway sold its thermal business for $1.35 billion, significantly beefing up its balance sheet. With this cash in hand, the company has been opportunistically expanding core operations through strategic acquisitions that develop its renewable energy generation and distribution capacity. Correspondingly, the company has clear visibility on its ability to increase dividends, targeting a 5% to 8% annual dividend growth rate through at least 2026. That places it well to keep benefiting from the ongoing clean energy push around the world. With steady cash flows and more renewable energy additions, it offers investors stability with growth potential. That stock combination makes a Clearway under-the-radar stock worth considering, especially for those looking for consistent returns within a volatile market. Given the strong balance sheet and continued build-outs into renewable assets, it would indicate that Clearway Energy is well-positioned to continue benefiting from future growth in green energy. Number 4. SolarEdge Technologies. SolarEdge Technologies is a company very few people know about, standing behind more famous names within the solar energy sector. The company serves a critical function in optimizing solar energy. Its inverter systems leave no stone unturned in exploiting the maximum number of units of energy out of photovoltaic panels, bringing down the ultimately generated cost of energy produced. This technology has an important task to play in worldwide efforts for making solar energy more affordable and accessible. In addition to solar inverters, SolarEdge has invested in and acquired companies involved with energy storage, electric vehicle charging, and smart grid technologies. Such investments allow SolarEdge to position itself as more than a solar company. It is turning into a comprehensive energy solutions provider. SolarEdge is in excellent shape financially, with a core business being highly profitable and generating robust cash flow. By the late 2023 year-end, the company boasted nearly $900 million in cash reserves, affording flexibility for further expansion by way of acquisition. This financial strength allows the company to pursue opportunities in new markets from EV charging to smart grid services, making it a versatile player in the energy space. This makes SolarEdge different, whereby it expands its product line from just inverters to smart energy solutions. At this point in history, on the cusp of a global transition to renewable energy and with the demand for energy-efficient technologies rising fast, this company's future directions are promisingly set. An innovative firm, it assures investors they will make money, though overall this should be important if considering a complete green energy stock. Number 3. Brookfield Renewable Partners. Brookfield Renewable is one of the largest operators in the renewable energy space, with among the largest hydroelectric power plant portfolios in the world. Roughly half of its energy mix falls under hydroelectricity, but the company is also highly invested in wind, solar, and energy storage. In similar fashion to Clearway Energy, long-term PAs represent the core of Brookfield's strategy, providing it with a stream of dependable revenues. Indeed, the proof is in the pudding when it comes to Brookfield's performance. That dividend has steadily grown at a 6% compound annual growth rate since 2001. Meanwhile, its funds from operations per share have also risen 12% per year since 2016 on the heels of its fast expanding renewable energy portfolio and smart buys. Longer term, Brookfield envisions a good runway for growth. With a strong pipeline of renewable energy projects, management targets annual growth in FFO per share of more than 10% through 2028. This growth will give Brookfield the continued ability to grow its dividend 5% to 9% annually, an attractive option for dividend-focused investors. Another key factor is how strong of a balance sheet Brookfield Renewable represents. This sets up the financial flexibility for large-scale acquisitions and development projects to take place within the company. In a rapidly growing sector such as renewable energy, scalability is tantamount to success in the long run. For any investor looking for a reliable income-generating stock in the green energy space, Brookfield Renewable strikes a very good balance with stability and growth. Number 2. First Solar. First Solar is one of the large global makers of solar panels, focusing on thin-film solar technology. That kind of panel is perfect for utility-scale projects because it produces more energy per panel compared with conventional solar technologies. Because the demand for solar panels is accelerating globally, First Solar will be in the right place at the right time. What sets First Solar apart is that it has a substantial manufacturing capacity and long-term contracts. The company has pre-sold its panels into the end of the decade, a fact that gives it substantial visibility into future revenue. In early 2023, First Solar announced it would build a new $1.1 billion manufacturing facility in Louisiana, adding still more to its production capacity. Financially, First Solar is among the most sound companies in the renewable energy space. The company expects to end 2024 with net cash anywhere between $900 million and $1.2 billion, even considering its heavy investments in new manufacturing facilities. A strong balance sheet opens ample financial flexibility for the company to pursue further expansions and make strategic acquisitions, if needed, to bolster its technology stack further. First Solar is not being left behind and is striving to make better solar panels. Recently, in 2023, the company announced it had acquired Evida, a European thin film company that will help accelerate development into the next generation of solar panels. Its commitment to innovation, underpinned by strong finances and growing demand for solar energy, makes First Solar a very appealing investment for those looking at exposure to the solar industry. Number 1. NextEra Energy. NextEra Energy is one of the world's largest producers of wind and solar energy, and is committed to reaching a goal of becoming carbon neutral by 2045. Its Real Zero initiative seeks the removal of all carbon emissions from its operations through massive investments in renewable energy, solar, wind, and green hydrogen. The two distinct segments of NextEra's renewables business include the utility in Florida and its energy resources division. The energy resources segment sells its power through long-term PPAs to other utilities and large corporate buyers, whereby the company secures predictable cash flow. It has been a big contributing force behind the company's high financial performance. Over the decade, NextEra has generated over 225% total return for shareholders, in large part due to its investments in renewable energy. Financially, NextEra is one of the best-positioned companies in the green energy space. It has grown adjusted earnings per share at a 10% compound annual rate since 2013 and increased its dividend by 11% annually during said period. The company expects to maintain this growth trajectory, targeting 6% to 8% annual earnings growth and 10% annual dividend growth through at least 2026. But it is the financial flexibility that really differentiates NextEra. With one of the best balance sheets in the utility sector, this company is well placed to keep investing billions into renewable energy. Indeed, for investors seeking exposure to a high-quality green energy leader with a long record of value creation, NextEra Energy arguably remains the best name in the sector. The under-the-radar stocks in fast-growing green energies offer investors unique opportunities to benefit from the global transition toward cleaner energy. These companies, in order, are Clearway Energy, SolarEdge Technologies, Brookfield Renewable, First Solar, and NextEra Energy. All of them are positioned to continue their growth and deliver value to shareholders. Added bonus, always do a little more research before jumping in. Finally, share this video with anyone also interested in green energy investments, and subscribe for more insights on emerging market trends.